All right, guys. So here you have to stop losing money on V75 because of fake break of structure. Most traders enter too early and get trapped. Today, I'll show you exactly how to confirm a real break of structure and avoid fake break. So now, if I show you the exactly thing you need to avoid, so example here, or before we go to the example, these are the things that I want you to see or that I want you to think of when you're approaching your your structure. Okay, it's fine. We will use red for now. Remember, you are approaching your resistance. The market is going up, moving smoothly, going up, going down, going up, going down. And then they hit the resistance. They come back down. Anyway, let's use this one instead. Because the market is going up, it's moving to the upside. We reach our resistance. From resistance, we come down. Remember, the market is not moving on a straight line, right? We go back to the support. Now, when we go back to the resistance, that's where you mostly get your fake breakout. The market will penetrate this resistance. It will go up like this. And then later on, the market continues to the downside. Most of the time where something like this happen, the only thing that you have to do is to move to your left hand side. The reason why you have to move to the left hand side is because of you want to see what happened before they break the structure. Let's do it the other way again. Let me erase. Now, the market is going down here. They create a continuation pattern and then they go down. This is your resistance level. Actually, this is your support. Let's push it up and then they move to the downside. They come back to test this support, but they go up to the resistance. They return to the support. Now, here you have a continuation pattern. And then the market will be respecting this as the first time resistance. Can you see that? Now, when the market's going to be respecting this as the first time resistance, the market will react on this support for the second time. As the market will be going up, this is going to be a resistance level. Now, they know that majority identified this level as their resistance. They will look for sell opportunities here. What they're going to do, they will push the market up to the continuation pattern before they push the market down. Now, for you, in order to know that, oh, now I have a continuation pattern, what is it that you have to do? You have to move to this trend to check what is it we have on this trend that can cause the market to penetrate the resistance first. And then later on, the market moves to the downside. If they left something unattended on the on the left hand side, bear in mind when they come back, they will penetrate the resistance a little bit and push the market to the downside. Let's use candlestick so that you can see. Let's add the horizontal line. Just use a horizontal line like this. And then let's create a candlestick pattern. This is your resistance level, right? The market will create something like this. And then there'll be a wick pushing all the way up like that. The next thing, the market moves to the downside. Let's assume that this is 4 hour or 1 hour. They will push the market up. The next thing they push the market to your direction. Most of the time, when they do something like this, it's when they show that when we come back to this level, we're going to break this level and go above. It means there's no orders here anymore. There is no orders here anymore that can cause the market to change the direction. Therefore, when they come back to this level, bear in mind, they will break as if there's nothing here and continue to the upside. Because of already they showed us that, okay, when we come back here, we will break. Now, I want us to go straight to the chart so that you can see what am I talking about here. This is 1 hour chart on which pair? On volatility 75. Now, look at this. The market gave you a resistance here. I said when we trade your resistance, you need to mark it as a zone, right? Here is our zone. Can you see the zone? Now, look at what the market did here. Use black. The market went through this resistance level. Now, you ask yourself, why did the market penetrated the resistance before it goes down? Your answer is on your left-hand side. By identifying your left-hand side, you will know how the market's going to react on the right-hand side. You will know that, oh, they're creating a fake out there. And what you can do, you have to enter where the market is penetrating, not on the resistance. How? You move to your left-hand side, you observe what is it you have. Here is your support on the left-hand side. Your support was broken. So if you look closer, the support was broken here. Can you see that? It was never tested here as much as your resistance. And then the market reacted on this resistance as it was coming back. You apply your line chart, you will see that the market turned accurately here based on the line chart. So now, if your market is approaching your support or it is approaching your resistance, what you have to do, you have to check if you have something on your left-hand side. If there is something that you see, you will know that they will create a fake out there. This thing happens most between support and resistance. Whenever you approach your support and resistance, bear in mind that you're going to have something like this. And then again, how to see that the market is now breaking that support, or how to see that the market is breaking that resistance. Let's do something like this. Again, we'll create candlesticks again. Let's use green. Let's say the market it was going up. It respected this level. Let's use red. Market came back for our chart. It went back up. It went back up to the resistance. It came back down again to the support. Remember, I said to you, when you approach the market using support and resistance, we trade only 2 touches of what? Of the support and resistance. This is for our chart. Let's add the horizontal line here. It's okay. Let's say, for an example, the market is breaking above. This is what you do. The market moves again to the upside. There, the market will just go up and close above the resistance level. Once they close above that resistance level, now you know that the market is no longer going to the downside. We have broken this resistance. The candlesticks will continue pushing to the upside. Now you know what to expect from here. The market continues pushing to the upside. From here, you know very well what is it that you have to do. You don't jump in here and say, okay, I see that the market has broken this resistance. I step in, I buy. You don't do that. You wait for the market to come down to the broken resistance to test it as what? As support. Again, as you're expecting the market to come down, you have to focus on this trend to see what is it that they left. Whatever Payana is what we're going to use to our advantage. So it is our job or our duty or our responsibility to look at what happened before they break. And again here, you need to pay attention to the previous trend to see Uguti, what is it we have. If there's nothing on our left-hand side that can cause the market to penetrate a little bit before it moves down, feel free to know that the market is breaking that level. But uma kuwukuthi you'll just jump in and feel like, you know what, the market will just go up, or the market just penetrated the resistance. It's time for me to buy. The market will go down again. And remember, I once mentioned that according to my experience, I do not have a fake out in the market, but I'm talking about a fake out because there's no proper way that I can use to talk about this. But instead, I'll use a fake out because most of you believe in fake out. So now let's look at another example. This is between support and a resistance only. Let's see. Okay, here we have another example. This is your resistance. Based on what? Based on the line chart. But let's go to 2-hour or 4-hour. This is your 2-hour chart. This is your 2-hour chart. Here is your what? Here is your resistance. If you look closer here, the market gave us this support. I'm sorry, this resistance, it went down, it went back up to the it went up to the same resistance level. If we look at this resistance, and this is where the resistance is based on this 2-hour chart. Let's apply a line chart. Sorry, let's apply a line chart so that you can see where the market turn. If you look at this 2-hour chart, this is where the market turn on the right hand side. I'm sorry, on the left hand side, I mean. And then when the market comes back to the same level, it goes up. The next thing it goes down. Why is that? Move to your left hand side. Let's go back to the candlesticks. If you look at your left hand side here, based on the line chart or based on the candlestick, that's where the market turned, right? This is where the market turned based on the candlesticks. Now, where the market turned, what do we have on the right hand side? We have a continuation pattern of which looks like this. Can you see that? Now, I said to you, when we trade support and resistance, we pay attention to the touches. Now, if I look closer here, how many touches we have? This is our touch, and then this is our touch again. I said when they penetrate, creating this fake out, they will break on the right-hand side when we come back. You can see what happened when we came back. They went through. Can you see that? Sharp. Now, I want you to move to the left-hand side and tell me what you see. What was the reason for the market to go up before it goes down? I want you to think of what you see there that could have caused the market to go up instead of going down. If you can't see anything, there's no problem. I'll show you. This is the main reason why the market went up. These are the things that they leave that will cause the market to behave in a way that you don't understand now what is happening. I said to you, when you analyze the market, you need to understand what you are talking about. You need to understand as well what you are doing. Again, this is what people will call liquidity swept. This is what people are calling liquidity swept. Most of you here, you know what I trade in the market. I trade trend lines. So let's say people are believing in liquidity swept. I enter on my trend line. This is the trend line onto our chart. Where is the liquidity swept here? Let's just try to make sense of what we are doing here. Let's just make it make sense. You know very well that you are trading trend lines. You notice that you have the first time touch of the trend line there. The market came back to this resistance. because of the continuation pattern on our left-hand side. Now, because of this continuation pattern on our left-hand side, the market went down. Now, as the market goes down, we have our second time touch day. What was supposed to happen here? The market was supposed to respect this continuation pattern and push all the way up to that trend line, and then the market goes down. But the market decided to respect the continuation pattern here, and of which this created our resistance level. Now the market came back again here. What do we get? We get a resistance again. Now, look at what happened on that accurate resistance. The market went through the resistance. What I always say to you guys, I always say you need to be careful. How do you need to be careful here? Most of you, you'll enter on that resistance. After entering on that resistance, you'll go to smaller time frame to look for a perfect exit. You'll find something like this on 15 minutes. The market goes through your stop loss. And if you look closer, I'll zoom in so that you can see and understand what happened here. This candlestick that you see tapped straight on the trend line. It went down. It closed below. It closed here. The next thing, you look at the market, you check, oh, flip, the market is now going down. That was a fake out. You step in here, you do what? You sell, expecting the market to continue to the downside. The market goes back up again. Hence, I always say to you, avoid jumping on a moving trend. If you are already late with your entry, wait for the market to create another opportunity for you so that you can enter based on the opportunity that they just created. So from here, you can see that the market is pushing to the downside. It goes back up with the candlesticks. The next thing, it moves to the downside. Every time, I always say, pay attention to your left-hand side. There's a continuation pattern here that caused the market to react on the right-hand side. As the market reacts here after going up, this is your continuation pattern here. Let me erase. This is your continuation pattern here. The market reacted on the continuation pattern. As this continuation pattern is pushing the market up, this continuation pattern here is continuing with the trend to push the market to the downside. So uma kuwukuthi wena uzobuka ama-liquidity swept here, whereas you have to understand ukuthi i-market yakho izopenetrate kanje because of what? Some, they call this thing illiquidity swept, some will call this thing a fake out. In other words, this was not supposed to happen. People are talking about all liquidity sweep, but they don't know the background of this thing. Okay, this thing they created because of what? Already, if you're gonna look at your chart like this, here's my resistance level, right? Here is my trend line. There's two touches. It needs to be touched 3 times. You're expecting the market to react on the same resistance. The market decide to go through the resistance, and then it goes down. And if you look closer, it is rejecting after testing that trend line. It happened twice. So in other words, you now know, oh, okay, flip. Now I see what is happening there. The trend line that they left as they were going down is what they are using on the right-hand side. You sometimes hear me saying, where people are placing their stop losses, it is where I place my entries. Those who got my ebook, you understand what is happening here. Those who got my ebook, you understand what is happening here. We just have a trend line. They went for the trend line, and then this is our continuation of the trend. You move to 30 minutes, looking at the chart. If you don't know that the market is communicating with you in all the angles, you'll find yourself moving in the same position over and over and over again. So here, if you look closer, we need to push a little bit back. Now, if you look closer here, the market gave you a number pair. The market gave you a support level, of which is this one. As the market gave you the support level, you come down. The market went down. Can you see that? After the market went down, it went back up. Take your trend line, push it all the way down. What do you get? A trend line. It looks like this. What do you get? A trend line. It looks like that. Now, if you look closer, this is what people are going to do here. Let's take this one. They will step in here and enter. This is 30 minutes. They will enter and place their stop losses just below. Now, if the market creates something like this on your left-hand side, it's what you need to pay attention to. There's a continuation pattern that needs to be tested here. There's a trend line that was broken here. What does that mean? The higher the chance that the market will continue to the downside, but the market gave you a structure that shows that it is going to the upside. Do you now see why it is important for you to go extra mile when you analyze? This is 30 minutes. You know how the market's going to react here. You know what decision you're supposed to be taking here. You move again. Remember, I told you about the market structure. Yesterday, we were talking about the market structure. I said when the market is moving to the downside, you're going to see something like this. And then the market goes back to test. It's your entry. Look at what they did here. Same thing. They did the same thing here. This one caused the market to come down and go up again. Look at the pattern now. The market gave you something like this. It went higher, it went low. Break a structure where there's a continuation pattern. The market went up again. And then it became a downtrend. That's your entry. You missed the trend line because you don't know how to trade a trend line right. You get another chance to enter. This is pure price action. If you do this over and over and over, good chat luck, it becomes clear for you. Let's erase again and focus here. Look at the stop loss. Look at where you guys place stop losses. Let me place my stop loss here. Now, when Iputa Lakulibeguppi here, you just pay attention to the break of structure here and be like, oh yeah, this is my entry. I'm going to sell. I place my stop loss above. What happened? The market went down. Later on, it went all the way up before it goes down. Yeah, the market was hunting my stop loss. You have a continuation pattern here. Your stop loss is supposed to be above the continuation pattern. What do you get instead? This is your continuation pattern. Angithi the whole point of me showing this thing ukutshengisa ukuthi ama-fake out identify kanjani and a-creator yini in most cases. That's your stop loss. Now, add the trend line again. From your left-hand side, ukhuphuke nayo to the right-hand side. Uyabona kwenzakaleni laphayana. Even though bangayithintanga accurately. Angifakanga kahle kwamina. Unfortunately, bayithinte accurate. Yimo ongafakanga kahle. Now, here's your trend line. Your first time touch. Your second time touch. The trend line was broken here. They came back for the trend line here. What are we looking for? A sell entry. Already with this information, you know what to do on the right-hand side. But if you can't identify these things, you will look for entries accurately on the support. Now that you know that everyone can trade support and resistance, you look closer, it's the same thing that happened here. This is your support level. This is your support level. They went through before going down. At another trend line, pushing it from there, pushing it all the way down like this. Your trend line makes sense. You go to roughly 1 hour again. You go to 1 hour. You go to 1 hour, you get everything. Remember, we are going down with the market right now. You can see that this is where the market turned. Based on the above trend line, let me adjust it accurately. Based on the above trend line, first time, second time, this is your third touch. The market went down. No problem. I erase again. I said I need us to focus mainly on the break of structures. So again here, they gave us what? A support. What is it that people are expecting after receiving or after noticing a support? They enter, they go to 15 minutes, they get their stop losses, they want to go down with the market. What is it the market's gonna do? The market will go through the stop loss as if there's nothing there. You look closer, you take your trend line, you push it all the way up. What do you get? Can you see that? And unfortunately, they came closer because of the, what you call, the spread. But forget about the spread now. Move to 30 minutes again. Look at the structure there. You will understand what happened. This information is very much important, guys, only if you want to become profitable. If you want to become profitable, use this information. It will help you daily with your entries. Remember, if we are on 30 minutes here, look at the structure. Let's apply a line chart. This is what the market did. It went up, down, higher, and then below. The level was broken. The market went down, it went back up. Now the market closed somewhere there and then continuing with the trend. The same structure that you see here is the same structure that was created up there. So now you understand why it is important for everyone to know these things. Let's go again to smaller time frames such as 15 minutes. Because as you are going down with the time frame, it's where you get almost everything that you need. You need to go through all the time frames so that you can understand it. Oh, they created something like this. This is how the market's going to react on the right hand side, because of the left hand side is the key for you to understand what is going to happen on the right hand side. We cannot just rely on the price alone. The left-hand side is there for you to guide you on what is going to happen on the right-hand side. Remember, I said according to my experience, the market cannot do anything without the left-hand side. I can even prove that. I've been proving you for the past few years, showing you the same thing. I think by now you guys understand what is happening. Let's zoom in again and look at what they did there. That's where you need to understand price action. If you look closer, they tend, let me adjust the trend line here. It is accurate based on smaller time frame, yes. Can you see the touches of the trend line? This is where they reacted. Moving to the right hand side again, this is where they reacted. This is also accurate. Now, as accurate as it is, people will focus on the market structure here and look for yes, and look for sell opportunities. Why? We have a support. It was broken. The market's supposed to respect the support as what here as resistant. They sell, they place their stop losses above. The market just goes straight all the way up. The next thing, the market goes down. Hey. Always when I buy, the market goes straight to my stop loss and then it goes to my direction. Hey. Always when I sell, the market goes straight to my stop loss before it goes to my directions. These are the reasons why the market will go through your stop losses. This is what people are calling liquidity swept. Some they are calling it fake out, but everything is presented. Everything they presented you is on your chart. There's your break of structure. This one is a visible support on a higher time frame. This is inside. And if you look closer, this support that was broken, it is matching with the trend line that was broken. It means the higher the chance the market will move to the downside. The higher the chance that the market will move to the downside. Now you understand, now you know. If the market reacts like this, when now you're supposed to do what? These are the things that you need to understand almost each and every day when you open your chart. You must not look for what you know. You must look for what they presented you with on your chart. That's the beginning of you becoming profitable because of now you use what they presented you with on your chart. You don't use what you know. Me, I know how to trade a head and shoulder. I'm looking for head and shoulders. There's no head and shoulder there. Me, I know how to approach the market here. They gave me 1, 2, 3, 1, 2, 3. The market is a sell. The market is going down. Yeah, I know. I can see. The market is going down. You're supposed to reach this support here. The market will keep going down. Yeah, I can see. I erase my chart. The market's supposed to come down to this support. And then we're going to buy. You fail to see that there's a continuation pattern that was never tested there. It pushed the market all the way up. And it's now you took an entry there based on the trend line, based on the resistance that was broken. The market just went down. Now the market is going up. Look at what they did again. This is what you will see over and over and over when you open your chart. Here you have your resistance level. Can you see that? If you look closer, they penetrated this resistance. They closed above. Now, as they closed above, you can still use this one as your resistance level. What happened? The market went all the way up to the resistance on your left-hand side. It came back down. But instead of reacting accurately on this break of structure, it went through. Why was that? At your trend line from your left-hand side, you'll get the answer. Can you see that? Everything oyidingayo ku-chart lakho bakupresentile ngayo. You just need to observe. You need to go extra mile with your analysis. You'll get everything. This thing, it happens between is support. Where there's support or where there's a resistance, you'll come across these things. No, always when I enter, the market goes against me. When I buy, the market goes against me before it goes to my direction. It is because if you did not understand this thing. That's where you have to advance skill circle. Once you advance a skill circle, it becomes easier for you to approach the market. Ganj. You have to approach the market like this. Market it moves to the upside. We figure ijika laphayana. We don't know why market ijike laphayana, but believe me, yonke into market bayasipresenta ngayo. Our job is to understand ukuthi kwenzakaleni. I go to 4 hour. We want to know why the market turned there. And we were buying here. Let's verify. Got this buyer laphayana. Market yahamba yazochika accurately laphayana. Why was that? Let's move to left-hand side. I'll erase the chart lami. Uma move to left-hand side, what is it I see? I said to you, whatever that I do on my right-hand side needs me to focus on my left-hand side. Hence, I said, there's nothing that you can do on your current price without relying on your left-hand side, right? Here, we had a continuation pattern. Let's highlight the continuation pattern. This continuation pattern was not tested even once. Anyway, can you see that this is 4 hour chart? This continuation pattern was never tested. And then what do you have here? A resistant level. A resistant level. How many touches you have on that resistant? 2 touches. It's 1, 2. I said when we have a support and resistant, they will give you 2 touches before they break that support. It was broken here. They went through. What do we have there? We have a continuation pattern. A continuation pattern on our left-hand side is pushing the market to the downside. Now, that's where you have to understand the overall trend of the direction. You go to 8 hour chart. You look at the same thing. You'll have everything that you need. Right now, you did not understand the direction of the market, right? You're assuming that no, the market is moving to the downside. The market is no longer going where? It's no longer going down. The market is going up. You can see here, you have a valid resistance. You have a valid resistance here. They came closer. They even left a continuation pattern. They went up. Now you have to wait for the market to come back and test the broken resistance as support. The market just went down. You go to higher time frame. You need to understand the direction of the market first. Hence, I always say, whatever you do, go to higher time frame. The reason for you to go to higher time frames because of you want to understand the direction of the market, right? This is 8-hour chart. On 8-hour chart, if you zoom in, the market respected this resistance level for the second time. Can you see this resistance? The market went to that resistance for the second time. Now it means the market reacted on this resistance twice. This resistance was supposed to be used when the market is going up. Hence, now the market was going down for the past few months. The market was just moving down. Now, so we are Zuguti here, the market is no longer going down. The market reacted on this, it went down. In future, when we come back to this level, we're going to break it. Let's go back. Why I always say learn to use a higher time frame so that you'll be able to see these things. Once you are able to identify these things on your chart, everything will be simplified. This is daily chart. This is daily chart. If you do have questions, guys, feel free to ask. This is so simple in a way that your job is to understand the support and the resistance. You must be able to identify almost everything that you need on your support. I said the other time, when I trade support and resistance, I pay attention to the touches. This is daily chart. Look at this. What do I have here? Resistant. How many touches we had here? 1, 2. You are out there, you are trading support and resistance. You believe that the more touches, the stronger the level. You come again here, you do what? You enter, you're expecting the market to go down, the market goes through your stop loss and go higher. When I trade support and resistance, the market is hitting my stop loss, the next thing it goes to my direction. This is daily chart. You won't even look for entries on daily. You'll go to smaller time frame to look for something perfect. The market will go through. Move again to your left hand side. Here is your resistance. How many touches? 2. But we're not going to focus on the 2 touches here because of the market did not come back. Your job is to understand and analyze the market according. Once you analyze the market according, everything becomes easier. Look at this downtrend. As the market was supposed to go down, so many people will expect the market to react on this resistance support and test it again, or else the market react here on the break of structure. This is your break of structure. Can you see that? Even if I place it up there, the market turned closer. Can you see that? There's a reason that shows that the market's going to turn there. Or there's a reason why the market turned the specific. Instead of turning here, I'll show you everything, how the fake outs are being created. How do you see if they're creating a fake out and stuff? All right. So here you look closer, we identify this is our resistance level. It comes from our previous broken support. And then they came closer here. They created a fresh support. Now, as they created the fresh support, you add a trend line there, you'll get an answer why the market turned without reaching the support. I told you how to trade a trend line. I told you, I don't know for how many years teaching you the same thing. Trend line table, you can use a trend line as your daily strategy. Your entry here. Now, if this is your entry, I want you to think outside the box and look at how you've been approaching the market and try to fix your mistakes. Here, you were expecting the market to do what? To continue doing what? Moving to the upside. All right. Now, the market, you're expecting it to go up. Okay, no problem. The market comes down now. Let's erase everything. The market comes down now. As the market is coming down, what do you see? The market is coming for this support. That means I must look for buy opportunities. The market's supposed to go up. This is daily chart. Look at how the market penetrated the daily chart. Where was your focus here? Your focus was on this support instead of looking around. What is it that they've presented you with? Now you are focusing on this support that was created by the third touch of the trend line. You enter here, you place your stop loss below. You like to go to smaller time frame, you go to roughly 1 hour or 15 minutes to look for an entry. You get your entry, you place your stop loss below. The market went up, it came back down to your stop loss. The next thing, it goes to your direction. Why was that? You move to your left hand side. There's a break of structure that is coming from our left hand side here that was not tested on the right hand side. Let's highlight the what? The buy zone. This is our buy zone. We are done. Now you are done. These are the things that you must learn when you are approaching a market yakho. These things will always be there. And if you don't know how to approach them, you'll keep on being manipulated by the market because of your information is not enough. But I assume that by now you guys are able to see Uguti, what were the things that were causing you to take losses. Now you can avoid them. Oh, okay, I see. Let's look for what happened here. A market yako is moving to the upside. What do you get? A resistant level here. Let's just go to 1 hour. I'm going to close here. We go to 1 hour. Ngifuna ukutshengisa ukuthi lezi zinto lezi bazisebenzisa kanjani to our advantage, where we have to see ukuthi okay, from here thina siphuma kanjani angithi. We apply ini pure price action. Let's mark this level as a zone instead, starting from the left hand side, and then we extend to the right hand side. Once ufunda uku-approach market yakho ngale ndlela, it becomes easy. Guys, by the way, here I am making a YouTube video. Ne? You must also go and watch more videos on my YouTube. So here you see, we have a break of structure. This is your broken support. It was broken here. It's supposed to become a what? A resistance on the right-hand side. It became the resistance on the right hand side. This is 1 hour chart. Now the market moves to the downside, it moves to the upside. You get opportunities based on the patterns I gave you. You get opportunities based on everything that I shared with you on my ebook. Look at this. The market is moving back to what? To the resistance level at your trend line here. There's your trend line. Even though it was penetrated a little bit, the market went up. No problem. Here is your resistance level. Your resistance was penetrated here. The market went down. It went up again before it goes down. You move with the market. It goes up. It goes up until we get here. Continuation pattern pushing the market to the resistance. Now that we are here, the market's supposed to come down. What do we get? Let's move to the right hand side. We get this. A1. You get this resistance. I-resistant yethu le ifuna sishaye kanjani, ifuna siyimarke as a zone. Angithi, if we mark this as a zone, you have to remove this one now. We mark it as a zone. When you mark the resistance as a zone, you need to cover the candlestick, the body of the candlestick, and the wick. You look closer here. They penetrated this resistance level. This is where you'll hear people saying, oh, the market was creating a fake out. How do you avoid a fake out? Move to your left hand side and look at what is it you have that on your left hand side that can cause the market to penetrate before it goes down. You move to your left hand side. Oh, I see here. There's another zone that was not tested. Therefore, the market turned here specific. The market turned here specific. That means if the market turned here as a resistant, the market will come back and test the resistance again, but it will penetrate before it goes down. That's what happens based on the previous trend. Now you are done. The market went down. I also said to you, avoid jumping on a moving trend just because of you want to find yourself selling. You look at the market here and be like, oh yeah, it's 1 hour, the market is a strong sell. You step in here, you sell, the market goes up. As you take your losses here, you'll assume that the market is no longer going down, it's an uptrend. You start buying here. You want to gain the money that you just lost. You buy here, the market goes up a little bit. You become excited. You can't even see if there's a break of structure or not there. You become excited. You add orders because of your own profit. You are about to gain the money that you lost as you were selling. The market, the next thing goes down. Good morning. The market goes down. If the market goes down, kanje usuthethe ini wena? Usuthethe i-loss. Uthethe i-loss, i-market yehla, wathatha i-loss, i-market ikhuphuka. What is it that you are supposed to do? You're supposed to do a simple thing. Wait for the market to go up. Angithi wena ngitshengisile lezi zinto lezi now. You know ukuthi i-market yakhe izo-reacta kuphi kanjani. There's your continuation pattern there. There's your continuation pattern. Just that manje i-chart lethu selingcolile. Let's remove everything. There's your continuation pattern. You add, you go back to our candlestick, you see. Now, let's go to smaller time frame so that you can see everything. I'll go to 15 minutes instead of 30 minutes, whereby you'll see the whole structure. What did I say to you guys? How do you identify that the market's gonna move like this? Look at the structure here. This is the structure that you have. The market went up, it went down, it went higher, and then this was broken. That's a sign that we're going to come back to this level before we sell. That's what you see here. The market went up, came back down. This is where they penetrated the resistance, and then they pushed the market all the way down. They went up to test. Now it's a sell. Yini enzima to approach the market like this? Why is it difficult to approach the market like this? I said to you, when you approach the market, you don't have to look for what you want to see. Instead, look for what they presented you with on your chart. You see here, there's a trend line that goes all the way up. Where is the trend line going? To the breaker structure. This is your your broken trend line. We don't use this trend line to buy. We use this trend line now to do what? To determine the direction of the market. You can see this trend line. The market was respecting this trend line for the longest time, and then they have broken the trend line now. It's a sign that the market is no longer going where? Up. The market is now moving to the downside. It was broken, they closed below, now they went all the way up to do what? To test the broken trend line. At the same time, we don't have only the broken trend line. We have a break of structure there. We don't have only the break of structure, we have a continuation pattern as well. So the higher the chance that the market will go down. Why is it hard to approach the market like these guys? Why is it hard for you to analyze like I am doing? It's been how many years in Chengisa one and the same thing, but you are not doing it? Why? It's fine, God. So now, what I want you to understand here is that when you approach a market, Yako, you need to relax. You need to relax and also understand which if a market Yako move like this,